As we await Nike's numbers, red flags on the consumer are popping up in other results. Walgreens, by far the biggest loser in the S&P today after posting a bottom-line miss, cutting its full-year forecast. The CEO saying it faces a difficult operating environment, including persistent pressures on the U.S. consumer. Levi's also plunging. Q2 revenue came in short of expectations, warning that consumers have been generally cautious and aren't spending on discretionary items. And macro uncertainty also hitting General Mills. Its CEO said they're expecting value-seeking behaviors by consumers to affect both the products they buy and channels they shop. And the consumer is going to be in focus just moments from now with Nike earnings. Again tomorrow when we get May's core PCE inflation print and Michigan's consumer sentiment index. So how will all of this factor into the Fed's plans? Joining us now is PIMCO's former chief economist, Paul McCulley. Paul, it seems like an interesting 5 trading days here between PCE and then that jobs number. Is the bar pretty high?
I think it is going to be very interesting the next few days. We'll all focus on tomorrow. We'll get a warm and fuzzy PCE print. But I think the following Friday with employment will be even more important because we're getting a lot of things coming together here that says the Fed should have more confidence in starting the easing process, not immediately, but in changing their rhetoric towards sooner rather than later. And I think, quite frankly, we're 1 week employment report from the Fed essentially setting up a September cut at the end of July meeting. That's not a guarantee, but I think that if you get a soggy employment report or very tame wages a week from tomorrow, then most likely they would tee up a September cut at the end of July meeting.
So, but are investors in danger of looking past the team that they're playing next to the team that they're playing next week? And I'm talking about looking past PCE into the jobs report in the sense that will the fine print perhaps matter more because people expect a warm and fuzzy PCE here?
I'm not sure, John. I don't think the fine print will matter all that much because the overall mosaic of the numbers are going to be warm and fuzzy, and that's not really a forecast. It's a bean count, given the fact that we've already got the CPI and the PPI. So you'd have to have something very adverse, I think, to change the sentiment tomorrow that we are getting closer. And then next week, we'll come into the employment report. That's hugely important. And then the following week, we will get Chair Powell testifying before Congress. And I think that is hugely important and would be the window, if you will, if Chair Powell wants to shift a bit in the dovish direction in his rhetoric, he would do so at that time, recalling that in March, he told Congress that we were not, quote, far from starting the easing process. So he'll be in a different environment. So we got a lot coming out over the next couple weeks.